All right, let's talk about IBM. Because wow, they just dropped an earnings report for Q3 2025 that really turned some heads. The numbers show a level of growth and profitability that has Wall Street buzzing. So what in the world is going on inside Big Blue? Let's dive in and explain it.
We're going to kick things off with this quote from IBM CEO Arvind Krishna, because it just perfectly sets the stage. The two words you really want to latch onto here are accelerated and exceeded expectations. This tells you right away that this wasn't just a good quarter, it was way better than many people were predicting.
So what does that acceleration actually look like? Well, this wasn't just a tiny win or a small beat. IBM's whole growth story genuinely shifted into a higher gear this quarter. Let's get right to the headline numbers.
First up, this number, over 7% revenue growth. Now you'll see this phrase, at constant currency. All that really means is they've stripped out the weird ups and downs of global currencies to give you the real picture of how the business is doing. And for IBM, this is the strongest growth they've seen in years.
So that 7% growth translates to a massive $16.3 billion in revenue for just one quarter. And here's the kicker. That number sailed right past what the analysts were betting on, which is a great sign that IBM is outperforming the market's predictions.
And here is a super important indicator of a company's financial health. $2.4 billion in free cash flow. Think of this as the actual cold, hard cash the business generated. It's the fuel for everything they do next. R&D, buying other companies, and paying back shareholders.
Okay, so revenue is up. That's great. But the big question is always, yeah, but did they have to spend a ton of money to get that growth? Well, the numbers show absolutely not. In fact, the exact opposite happened. Not only did IBM grow, it got a lot more efficient.
Just take a look at this. Their operating margin, it got bigger for the 9th quarter in a row. Adjusted EBITDA, which is basically a good look at their operational profit, jumped a really strong 22%. And earnings per share, up 15%. The story here is crystal clear. This wasn't just growth, it was profitable growth. All right, so we know what happened, strong and profitable growth. Now let's get into the how. Where did this performance actually come from? Let's peel back the onion and look at IBM's main business units. As you can see, software is the biggest piece of the pie, pulling in $7.2 billion. Then you've got consulting and infrastructure. But what's so cool about this quarter is that every single one of these segments pulled its weight. They were all part of the success story.
And when you look at the performance, you can see that acceleration pretty much everywhere. Software grew a really healthy 9%, and that was juiced by a huge 22% surge in their automation business. Consulting, which people were kind of worried about, is back in the green. And infrastructure delivered a really impressive 15% jump.
But hold on. Inside that infrastructure number, there's one figure that is just a total showstopper. A staggering 59% growth in IBM Z mainframes. Yeah, you heard that right, mainframes. This was their best third quarter in almost 2 decades, all thanks to their new Z17 platform. It's just a fascinating reminder that you should never count out so-called legacy tech.
Okay, so we've got software, consulting, even mainframes all firing on all cylinders. It's impressive. But there's a common thread, right? A kind of secret sauce connecting all these wins. And that, my friends, is all about artificial intelligence.
So what's the one thing tying all this together? From those mainframes to the cutting-edge consulting gigs? The driver is increasingly AI. And for IBM, this is not just some buzzword on a presentation. It's a rapidly growing, multi-billion-dollar business.
Get a load of this number, $9.5 billion. That is the total book of business IBM has built around generative AI since it started tracking it. And let's be super clear, this isn't some pie-in-the-sky forecast. These are real, signed contracts for AI software and consulting projects. And this AI engine is just humming. You've got huge demand for their platforms like Watson X. They're pushing out new models like Granite 4.0. But what I think is really clever is this client zero thing they're doing. Basically, they use their own AI journey as the sales pitch, and it is working. It helped them land over 1,000 client deals and more than $1.5 billion in AI consulting work, just this quarter.
You know, when a company has a quarter this strong, it's not just about looking back at the last 3 months. It completely changes the conversation about what's coming next. And you can tell IBM's leadership is feeling pretty confident about the road ahead.
And you don't have to take my word for it. CEO Arvind Krishna came right out and said it. They're raising their full-year outlook for both revenue and free cash flow. That's a powerful signal to the market, basically saying, yeah, we're doing even better than we thought. So let's see what that new forecast actually looks like.
Okay, so their old forecast for revenue growth was this kind of vague mid-single digits. Now, it's a much more confident more than 5%. But the real stunner is the free cash flow. They went from thinking they'd generate around $12 billion to now saying it'll be about $14 billion. That is a massive $2 billion jump in confidence. That's huge.
And all of this brings us back to the big question hanging over these results. IBM proved its hybrid cloud and AI strategy can deliver a knockout quarter. The challenge now is to turn this moment of acceleration into sustained momentum. Can their big bet on AI be the engine that powers a whole new era of growth for this tech giant?